Matt Orton is.
I mean, is there a time to panic? Like, panic now.
Maybe panic at the top of the bull market. I don't know. No, but seriously, the thing about stock market investing is that, of course, these things are always true. And of course, that's how you build wealth in the long term. So it's just hard day to day when you can see, as we said, people have fogey, fear of getting in. You're afraid to get in at all-time highs.
Point at me when you said that.
Because we talked about it. We talked about it. And now there's all of these things you can look at and say, well, maybe now's not the time.
Yeah, well, I love the acronyms FOGI, FOMO, TINO. There's never a shortage of that. But it seems like such simple advice, Kelly, but it's tough for a lot of investors to overcome the biases where when there's uncertainty, rather than leaning into that uncertainty where we know the fundamental backdrop is still very, very stable, it's hard to take that plunge and actually want to make an allocation into the market. And the advice I've been giving investors throughout this year, after DeepSeek, after Liberation Day, was follow the fundamentals, lean into longer-term, durable, secular growth trends that might not be as impacted by some of that uncertainty, and really just follow the money, follow where the cash is being invested in this economy. And that has served you very, very well, not only to capture a lot of great growth, but also when the market's pulled back, those names have been compelling to add to, not only this year, but over the past 5, 10, 15 years. So I'm still optimistic about where we go, and I still think there are a lot of opportunities for investors to get into if we're given some pullbacks.
Do you want to get more specific? So this is always, do you just kind of buy the S&P? Do you go international this year, even with everything going on? Any kind of tactical advice?
Yeah, so I think the easy gains in this rally, Kelly, are past us. I think we're seeing that right now. The market's trying to find excuses to sell off, so selectivity matters a lot more. We saw dispersion increase during the last earnings season, and so what companies are actually fundamentally delivering really matter a lot more. So within that theme of leaning into where those long-term growth themes are, I think number one is lean into the tangential AI trade. We've seen a significant amount of gains to the hyperscalers, but they're spending $335 billion this year alone. Who are the beneficiaries of those? Look downstream. I like electronic equipment's area. Vertiv's been a top pick of mine that we've discussed in the past.
And you're still with that one.
Absolutely. When it got irrationally low after DeepSeek, that was the time to move in, because when you listen to their earnings report and talk to the management team, they have got backlogs multi-years out, and they're leaning into the trends that are very compelling, not only for liquid cooling, but also power and finding ways for the future of powering all of these data centers that are being built. So that's one example. And then you can look down as well into defense. Front and center today, but I've been talking about leaning into defense or playing offense with defense throughout this year. And if you get a pullback in some of those European names, Leonardo is one of my top picks. It's an aeronautics electric company. They're levered to a lot of the growth, not only on the drone side of things, helicopters, but also unmanned vehicles. So I think there's a lot of areas investors can find success and diversify portfolios.
You were saying in the break when you sat down, you just got back from an overseas trip.
Yes.
Pretty much every stock market in the world is doing better than us. I mean, we did better than everybody else for years. But now you look at Germany and Spain and Saudi Arabia, and we're pretty much throw a dart, and that stock market's probably doing better. Is there a trend there? Is that a long-term trend? Should I have half my money in European stocks for the next 5 years?
No, I think you want to have an allocation to global stocks. I'm still overweight the U.S. I think this idea of U.S. exceptionalism being over is overstated. The U.S. still has some of the best earnings growth in the world. That's unlikely to change going forward, but a lot of these other countries are catching up. Their earnings growth is inflecting higher. Their economic outlooks are starting to improve, and they're cheap. But you look even past Europe, Brian, you look at countries like India, where I just was 2 weeks ago. There's fantastic growth. You're going to print 6.5% to 7% GDP growth with a growing middle class and a number of very high-quality companies that don't just serve India, but the rest of the world. That's a compelling ballast to portfolios that I would want to add to.
And you can, by the way, you're going to love that.